Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Thursday, November 15th, 2018. Wanted to get this one out. I was going to wait to do an end of day market wrap, but I'd rather get this one out before the market closes today and give everyone a heads up of really what I'm seeing here. That way, it would give you time to, if you want to make any adjustments to your positioning before the market closes. This video should be out by then. All right, so it's 2:45 right now p.m. Eastern time. And here's those. This is what I've been watching on the futures recently. I've highlighted these pretty strong bullish divergences, and you guys know I like to swing trade off the 60-minute time frames. That's one of my favorite time frames. Look for these divergent highs and lows coupled with any type of buy signal. So what we have today is pretty fairly impulsive move up. Relative to the volatility recently. We're up in the futures right now. We'll get to the SPY and QQQ here in a second, but we're up 1.25%. You can see down on the bottom. Pretty big green candle. And so what happens is as we zoom in here, you can see that ES, I should have mentioned these are the ES or S&P 500 E-mini futures. They've taken out this trend line. I've modified that trend line ever so slightly from where it was yesterday, barely. I just tightened it up a little bit closer to these candles. So either way, we have a breakout of both the trend line and then that 27, 2150-ish level there. So right now that's a breakout, and unless that breakout fails, anything's possible. Remember, the trend recently has been, or the MO, if you will, of this market, modus operandi has been sell the rips. So as soon as you get these rallies, they start to look good, we've sold into. And the thing is, that happens until it stops happening. So I don't want to sound too confusing there, but I want to point these out. These bearish developments, I'm sorry, bullish developments today. Take them on face value. We've broken out here, and if we don't have this rip sold into, I don't see really much resistance. I'm sure I could pick up some very minor levels there. I'll tell you right now. Here, if you want to trade ES, if you are trading ES, I see a little bit of minor resistance right there. It comes in about 27.32. And then more significant resistance up here about 2750. And based on the scope of this pattern, that is would be my preferred target if they don't sell it in. But let's see what happens. First, let's see if they can take out 2732. If they come and sell into this breakout very quickly, it just shows you that we still have a ton of trapped longs or wannabe sellers waiting, lurking in the shadows for any type of bounce. So if we can put 2732 in the rearview mirror, and again, I'm going to get to NQ in a second here. Those are the two main indexes I follow, the S&P 500 and Nasdaq 100. That would be a likely bounce target. Um, does it have the potential to morph into something more? It always does. Anytime you have a correction, and again, with some of your longest term bull market indicators still bullish, my short term and intermediate term indicators are bearish, but my longest term indicators, some of the trend lines and moving averages are still clinging. They're still in bullish territory right now. So anything's possible. I want to lay these scenarios out, lay out these levels, and let you guys decide how to position. I know some people on right side of the chart, were going long based on either their own analysis or maybe in conjunction with some of these divergences I showed here. But one thing that happened recently, you can see a defense here of that 2695 level. We popped below it briefly and we've snapped back above it. And that in itself, at least very near term, is pretty bullish because what happens, that's a stop raid or a bear trap. You see that support level broken. Some longs get stopped out. It shakes out the weak-handed longs that are in the market right now, or some of them, and it also sucks in shorts who now have to cover once they realize, hey, we should have plunged after breaking that level. So, okay, so that's all in all right now. You can't take this as anything but near-term bullish. And again, these are 60-minute charts. I'm going to get to the daily charts in a second. Nothing really significant has changed there yet. But how, depending on how this plays out, there's always a potential. I mean, at any given time, obviously, there's the potential for longer-term charts to change. Let's look at NQ real quick while we're still in the futures. This is the NQ 60-minute chart, Nasdaq 100 futures, and same story. On NQ, you had a pretty clean, bullish falling wedge pattern. By clean, I mean lots of nice reactions along there. Takes a clean shape of a wedge pattern, complete with positive divergences, which you want to see. And again, these divergences show better on the futures. I mentioned that before. We don't have as strong divergences. We don't have any divergences, I believe, on SPY. We'll get to that in a second. And we had a little bit slight divergences on the QQQ. Now, where we're at right now, a pretty big level. And remember, this correction, the majority of this correction, almost all of it, has been all about one thing, the FANG stocks. Facebook, Amazon, Apple, Microsoft, Alphabet. That is, we're seeing the unwinding of that FANG bubble, a lot of selling in those overcrowded trades. So I'm putting a higher weighting, where I'm going with this, a higher weighting on the analysis right now for the Nasdaq 100 and QQQ, because that's what it's all about. So what I'm looking at now, so you know, take it as you want to see. That is a breakout. It's bullish, pretty big green impulsive candle getting up there. But we've run so far smack into this resistance. And so right around 69.07. So we need to take that out clearly. Otherwise, that will have proven to be, or could prove to be, a bull trap or a failed breakout, and then we could shoot back down. Like I mentioned yesterday, there's still plenty of room if we do take another jog down for these divergences to extend. If I take these divergence lines, that's how they look now. Maybe we take another low. As long as you have higher lows in these indicators, with prices making lower lows, you have bullish divergence. So there's still the potential to take another leg down. Um, and we'll probably know soon. That's why it's now an hour and 10 minutes left to go. If they sell this rally down hard, it's just more of the same. And basically, we just had a bounce back to resistance, which then provided another shorting op. But remember, here's the thing: the way I look at the markets or any security, the more you fall, the most objective shorting ops were up here on this little minor trend line break. There's a small trend line there. It's colored dark. And then we had opportunity here on a breakdown, another opportunity on a back test, another opportunity here on the back kick back to that resistance level. But the more you go down, the less objective and attractive it is to add new short positions, or especially to open a short position if you didn't have one already. You can scale in, average down, but I wanted to point that out, that although the longer term charts indicate more downside, if you're new to my analysis, the preferred scenario I've been working off of has us going down considerably to probably either at least match, if not undercut, the recent lows there, and then reverse, and in doing so, put in bullish divergence down here on the daily time frame. Again, that would be, it's my preferred scenario and it's my optimal scenario. I'd like to see that. That way we could cover, reel in our short exposure here and start going into some longs for what could prove to be a multi-week or even a multi-month bounce. But again, I don't want to get too far ahead of myself here, because we just have to see how the charts look at the time, if and when we get there. So right now, my big focus is on the near term. So looking at this daily chart, you can see this is a pretty clean version of my SPY daily chart. I only have a few different levels on here, some pretty important levels, about 281 right there. That's that resistance level there. It also capped this previous reaction back here. 259.24, give or take, that's that recent low. We also had some reactions there earlier in the year around that level. And I have a midpoint here, support level at 268.59, and you can see so far we caught that support level and we're bouncing pretty impulsively. And again, it's not just a random level. There's reasons for that line there, quite a few reactions. So all right, so let's zoom in, take a look. So we see a pretty big green candle. In fact, it's the biggest green candle we've had now in over a week. This it's the only green candle we've had for a while now. You can see that. So far so good. What does it mean technically? Well, so far not too much. It's we were oversold. You can only go down, even when you're going down a lot farther, like right here, for example. You're gonna have kickback rallies. It's just comes with it. You can see a lot of selling there. We had a little counter trend bounce with a couple green candles there, and then we continued lower. Even when we went lower, there were a few days we closed green. This market doesn't want to make it easy on the longs or shorts here. It's just the nature of this beast with the volatility. So again, I wanted to point that out. It is a big green candle. Somewhat significant that it came off support right here, and especially after a little undercut. You can see the skinny part, which is a candlestick tail or shadow. means we dipped intraday. That was that fake out move I showed you on the 60-minute chart, and then boom, pop back above there. So what would, well, it's hard to say right now. I can tell you it would look a little better at the end of the day if the bulls continue to ramp it up, or the buyers. I shouldn't say bulls, bears. I'm just talking buying. If we ramp up and we close and engulf this previous red candle, we'd have a bullish engulfing candle. But I'll tell you what, we're still in a very precarious situation from a technical perspective. There's a 200-day EMA, the red line. That's capped a lot of the advances in the past. It capped it here, capped it here. It was support here. It broke down. So that we still have that to contend with. And let's look at QQQ real quick. QQQ on the daily chart. We have a couple different variations here. This is a clean, simple version here. We have this trend line here, which we recently back tested. We're still below the key 200-day exponential moving average. This candle has the potential to put in a bullish engulfing, but I need to say this. This is very important. I said this back here recently. We had a couple bullish and bearish engulfing candles. To me at least, and I think if you look up in most textbooks, you're going to see a bullish or bearish engulfing candlestick is a potential topping or bottoming stick. If you have, after a prolonged uptrend, you have a bearish engulfing, let's say it comes up here at the top, that can be a topping stick, especially if you have additional red candles. But when they come in the middle of a trading range or a trend, like right here, for example, there's a bearish engulfing, but that's not a topping stick. It didn't come at the highs. Likewise, a bullish engulfing candle needs to come at the end of an extended downtrend. This is just a short-term downtrend, and it could play out, but typically you want to see, like, you look at USO oil, crude oil, which just had a big slide. If you put a big bullish engulfing candle in there, it means a lot more because you've had a multi-week slide down in crude oil. So I wanted to point that out. But sometimes traders jump all over that. They see the bullish engulfing, and you might see some more upside. So if we do, just watch out for. Let's look at the near-term overhead levels. All right, so here's the falling wedge on QQQ 60-minute chart. And as I mentioned, QQQ has a little bit of divergence on the 60, and this is what's been giving me pause lately. As far as the short trades go, these 60-minute divergences, whether they're bullish or bearish, they get my attention. Why? Because they usually play out for a trend reversal. We'll see how far this one goes. So far, technical analysis is kicking in, working perfectly. What I mean by that, well, you had this level here. Let's just talk levels. All right, you had the big gap right here from October 30th to 31st. So there's your Halloween gap right there. The bottom of the gap and the top are your two resistance and support levels. So the bottom of the gap, once this gap was backfilled right here, you see we came to the bottom. We tested as it should. The bottom of the gap acted as support as it usually does. However, support once broken becomes resistance. We drop down below it and then test from above, right? Now today, two things happen. Number one, we broke above the bullish falling wedge pattern that I've been highlighting, and we broke back above that 166 support / resistance level, which was the bottom of that gap. So I love it when I see not one but two intersecting resistance levels on a long side trade setup or bullish setup, because when that level breaks, some eyes might have only been focused on the downtrend line and the falling wedge. Others might have been focused on this. I was watching both, and additional validity or confirmation, if you will, that was a well-watched and significant technical level is the fact you didn't have one of these little wimpy, tiny little candles here that we've seen, which has been the norm lately. You had the biggest green candle in a long time. So that shows that was a significant technical level. So far, they built on it, but then look what happened. I haven't modified these lines, I don't believe, since the last video or last couple. 168.67 I had up as the first target resistance level, and so far the high was 168.54, so pretty darn close. You can see, and that's where we reverse. So where do we go from here? Here's what I'll say. This wedge would certainly project a little higher, project up here, but you have to remember the primary trend is down. The MO lately in this market has been sell the rips, so there's a very good chance you have to give it to the prevailing trend. I can tell you I can make a bullish or bearish case on this that we can go up or down more, but you have to give it to the prevailing trend and say that that breakout, that may be all we have. I can't tell you with the highest degree of confidence, but when the trend is bearish, it's like a bullish trend in reverse. In a bullish trend, you want to buy the dips. In a bearish trend, you want to sell the rips. So all I can say is that may cap today's advance. It would certainly be an objective place if you wanted to add short interest. Remember, as I said, the more you go down, the more over or stretched you get, more overbought, and the greater chance of a snapback rally. So, is it shorting today on this rip as objective as it was here when we added that official QQQ short trade a few, last week or so? No, it's not nearly as objective. But my preferred scenario would have us reversing here and going back down. But personally, me, I'm sitting tight on the swing trades. I am short on my swing trades. I active trade in my trading account, and but right now, that's where I'm looking as a good chance that that stops this advance. And if it doesn't, you still have a slew of other resistance levels. And I guess an easier way for me to put this is, if and as we smash on through these levels, especially if we got back above that high from what was it, the 8th, that could open the door up for a much bigger move. But there's still a ton of work for this market to do on the long side, on the bullish, to firm up the bullish case. And I just come back to this longer term chart, the daily and the weekly. And out here, nothing has changed. When I look at this, everything that's happened since this high here, everything that I've mentioned, it's half of it's not even shown on this chart. 60-minute breakdowns, major long-term trend lines, daily trend line breaks, weekly trend line breaks, key moving averages get taken out, all that stuff. This tells me we're probably headed down. It just gets a little tough right here in the near term, and that's really, I'm probably spending too much time on that because most traders, I do have quite a bit of active traders on the site, but if you're swing trading, I can tell you right now, it would take a very, very big move up from where we are today, tomorrow, and probably into next week to really foil the bearish technicals that have taken place recently, and to make me back off my expectation that we're probably going to head down. We have maybe another, at least 3 to 5% downside in the market, and possibly more. That's my preferred scenario right now. What you're looking at on the daily chart too, potential bearish PPO crossover right now on QQQ. They could foil that if they can build on today's rally. We may the PPO may kiss that signal line and cross up. But as of now, it looks to me poised to go down and make a bearish crossover and then continue on down. And we may or may not get that bullish divergence I'm looking for on the daily chart when we come and finally put in a low here. If we do, it would help the case for a nice, counter trend rally, maybe another back test of the trend line, possibly. But it all depends. Again, we'll have to see how far we go and how things look when we get down there. Okay, last chart, and we'll wrap this up so I can get it out to you guys. And again, I don't want to apologize for the potentially conflicting analysis. I just want to say it gets a little unclear when you have these bullish divergences on the 60-minute chart. But one thing I made mention, I showed you we had slight, not very convincing divergence on QQQ. We don't have any type of positive divergence on, well, I shouldn't say any type. There's slight divergence. And again, you really have to stretch to point it out. But you can see the RSI making roughly equal lows with lower lows on SPY. And again, this is a 60-minute chart, but we don't have PPO divergence. If we did have nice, clean, bullish divergence, like again, if you were following me back here, this was pointed out at the time. This was the kind of divergence that I like to see to get a nice counter trend rally. This was a big, strong, bullish divergent low, and it played out for a very nice counter trend rally, allowed us to cover a lot of shorts there, go into some longs, and then get back short up here. This is not very convincing. There is a bullish crossover on the PPO right now, a crossover. It's not divergence, and that could carry us a little higher, but you can see right now. I'll just make it very plain and simple for you. If they build on this rally, my expectation is that my uppermost target right now would be 275.13. You can see it's pretty significant resistance. If that gets taken out with conviction, I'll do an update at the time. I don't see a whole lot up till again up to that 281 level. We already tested it twice. I doubt we're going to get there a third time and test it. Anything's possible. But if we started to move on through there and got that high, I guess we'd probably just pop above it. So let's see what happens. Right now, I do not favor us going that high. I favor us either um, turning down here or up to this 275.13 point, roughly give or take. And if anything changes from there, we'll just have to see again how this rally evolves today with another hour or so to go down trading and again into tomorrow. My guess is one way or another, they're going to keep everybody guessing by the close tomorrow on Friday's close. You head into the weekend. I would be surprised if we got above 275.13 by tomorrow, but anything's possible. So we'll wrap it up here, and I'll let you know if anything changes. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.